Okay, a quick word about the many benefits of becoming a member of the Green Star Trading Patreon. Maybe give yourself a belated Christmas present, or maybe consider signing up at the start of the new year. Perfect time to do it. Anyway, a quick rundown of what you can expect. So if you sign up to our most popular tier, which is the tier 2 here for £10 a month, you get access to the public Discord, you get access to weekly live streams. There's dozens of channels on the Discord in which you can communicate with our members. You also get access to loads of exclusive content, all of the educational materials I pull out, and all of the exclusive weekly content I pull out, which doesn't go on YouTube, plus my Elliott Wave series, trading content, all sorts of stuff. That's for £10 a month. £15 a month bags you all of that same stuff, but it also gives you access to the proprietary stock rating system and dividend calendar that I pull out each month, and the video that supports that. So if we just scroll down over the Patreon here, you can see the most recent post I pull out is Economic Indicators Monthly Review. This is where I cover housing, permit starts, completions, the Institute of Supply Management Report on Business for Manufacturing. I sometimes look at services, but manufacturing this month, which is the primary one I look at. Consumer surveys from the University of Michigan. Yield curve information, Fed funds rate, unemployment data, CPI data. This is only available to patrons, and I do it every month to get an idea of how the economy is looking going forward, not looking at the stupid or pointless lagging indicators which the media throws at us, but looking at things long before they happen. Okay, and then we've got a couple of live streams. Like I said, I do the live stream each week for our tier 2s and tier 3s. And then we've got our dividend stock picks for December. Soon this will be for January 23, which will be coming out next week. So perfect time to sign up and have a look at the available investment opportunities going into the new year. Alright then guys, thank you very much for joining me on this plug for the Patreon. I ask you to really take some time to consider joining up. It is definitely worth your while, and feel free to follow the link in the description box below. Come over and have a read of the tiers for yourself. And yeah, thank you very much for listening. Now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, it's time to have a look at Bitcoin, and we're going to be starting on the larger time frame here, looking at some classical analysis. Then we're going to come in and have a look at the Elliott wave counts on the smaller time frame. So to begin, in case you're new to the channel and you haven't seen the video before, we're just going to go over some key levels and some key parts of the classical analysis before we dig down here on the count. So we're just going to turn the primary count off, and we're just going to go over some basics here for a minute. So support levels and demand. So first things first, and let's bring up our golden ratio in log. As I pointed out several times, we've got this overlap of the 61.8 here in amongst these points of control, these peaks in the volume profile, amongst major support levels of the previous highs, previous lows, overlapping, with the strongest area being this, this 9953 spot 51, roughly 10 grand region. That gives us a little target zone that we've been working on, which is all of this in this demand here between 12 grand, and I've got as low as 8,000. We could potentially find a low as and when we finally get a completed move down here. Still suspecting 5 waves is going to push down here to complete a larger pattern. Now we don't have to come down this deep, of course. It's just where there's an awful lot of confluence down here. If we look at our fib extensions we've got here as well, fib targets. So using this pivot here and using this pivot here, which we are assuming is a subwave of a larger move down, we get a 1-to-1 extension here, we get a 1-to-1 extension here, and we get an 89% linear retracement, swing low to swing high, straight over the golden ratio, straight over support, straight into demand zone, straight around all this volume. So that's the same old story, right? We've gone over this time and time and time again. That's where it makes sense for the price to come down to. That's where it makes sense for it to find support in this thickest trading area. Now, that's all well and good. It doesn't mean we have to get there, does it? So that's all the stuff we frequently cover, that we frequently look at to build the case that somewhere in all this thick trading we're going to find a low. Right, and then we're going to start the next move up, whatever the hell that is. Is there anything else we should be adding to the chart? Well, yeah, I've been looking at a few other things lately. So, for example, I've added in a monthly level that's caught my attention here at 13,899.65, so much higher than our target zone. Okay, well, I say much higher. This is a log chart. It is significantly higher, it just doesn't look like it, right? Okay, and you know, that's above a lot of our support. We've got a support level here, as you can see, which is at the same level as that monthly level. That's based off of this high here, but this monthly level is basically based off of this close and this open, okay, on these monthly candles here. We get a wick test of it here, and we get another candle close here right at the same level. So it's a significant level of support we should be looking at as well, something that's above the other local targets we've been looking at. Now, to go along with this in linear scale, I just want to show you a base channel for a moment, based off of the first swing off of the 2018 low to the first swing high, swing low 19 to March 20 low. Right, so this move here, taking these two lows, projecting forward in time from this high here, and we can see that we've basically come back to that fib channel. Right, so we've basically come back to that base channel, and although it appears for the moment from a horizontal support point of view that we don't really have any reason to have stopped here, there's always something sitting underneath us, okay, and I would suspect that this base channel is one of the main causes of us stopping here for the moment at least. Now, we may have bottomed, it's always possible. I don't tend to lean that way myself, but if we saw something coming out of here invalidating our counts on a smaller time frame, we'd have to pay some attention. Now, one of the things that I like to use occasionally are fib channels, and I'll use them as base channels, and I'll use them as larger channels, and I'll add multiple levels to them to encompass more price data. So if I take the same here and I use a fib channel, what I noticed was taking the same lows as the 100, we get, let's come to the weekly because it's a little easier to see, we get a lot of play around these levels. Bodies of the candles here at the 23.6, bodies of the candles here at 23.6, around the 50, around the 38.2, 38.2, 38.2, 61.8, 61.8, golden zone here. You can see how we've been playing around these levels. You can also see how projected forward in time, come back to the weekly, that 23 negative 23 level was also free support levels. Now we know this strong horizontal support here, right, and the prior demand zone back here. This goes all the way back to these prior highs. Right, so we had a reason to stop down here, but we've also got another reason here as well. This fib channel, which you can see played out multiple times, and now we drop down to the 100, to the zero bound here, sorry, between the 0 and the 100, which is basically a base channel, which we just looked at with the fib channel on the linear scale. Okay, so we've got some support here. Right. On that note, I decided, as I do like playing around with fib channels, to apply one to the larger, longer term price structure of Bitcoin, and I found something a little interesting. I'm not sure if you'll find this interesting at all, but it's just something that I noticed. So these are using my same fib channel settings. So the light red line here is a minus 23.6, and then we've got the 100 0, sorry, all the way down to the 100% retracement here at the bottom. And what I'd like you to take note of is just how much we play with these levels. So here's a positive 23.6, and look at that, multiple levels of support and resistance along there. We do the same here in the 38.2, a wick here, a wick to here, to here. Okay, a little back test here, didn't really get anything up this end. The 50 has had a significant impact, resistance, support, resistance, support, resistance at 23.6, down to the 78.6, 50, 50, and then back here we haven't really had an impact with the 50. Going forward with the golden zone, bottom, bottom, double bottoms here at the golden ratio, 61.8. Here, 61.8 golden zone, 65, constantly playing with the price sideways or diagonally, I guess you could say, back testing it, and now we've come down to the 78.6 here, and we're bouncing along that. So this is just another interesting level I've noticed, so I've decided to add it to the chart. And if we take a wave 2 linear retracement at the moment, we've got the 78.6 diagonally in the fib channel, overlapping roughly with the 78.6 here, where we appear to be getting some kind of rejection. We also bottomed on the 78.6 or close to it before, so are we going to finally get a bounce out of here, breaking this downward trend and heading back up into this 61.8 to find resistance, where we've got this confluence of golden zones here, 61.8 horizontally, 65, 61.8 and 65 going diagonally as well, and maybe get something off of the low that's bullish, at least for the short term? Or are we going to get rejected here, come down to test a deeper level, maybe the 89 or all the way down to the 100, which brings us into that 89% retracement, which is the golden zone in log scale, which we spoke about. Let's just adjust. I need to adjust that. Bear with me. Hide this one. Yeah, I must have changed the settings on it. Yeah, there we go. So as we spoke about earlier, that's the 89, that's the 61.8. Okay, and it happens to perfectly overlap support, demand, blah 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 blah, all here, also at the edge of this fib channel. So from 0 all the way to the 100% retracement, maybe we're just doing a really deep move for all these levels into a huge area of confluence support, and then we're going to come out of there and finally move higher. So I mean, I thought I'd just include it in case you're interested, but you know, I understand that some people just aren't going to care either way, but I just found that a curious little feature. So we've got that added to the chart as well. We've got our monthly level, which is not far below where we are, around the 50 on the Fibonacci log-based retracement here. So we're going to keep an eye on that as well. We've got that base channel that we've added now as well. So essentially, you can see what I'm doing. I'm getting bored. I'm just getting bored, and I'm adding things to the chart because we've gone nowhere in 6 months. We may have gone up, we may have gone down, but we're roughly where we were at the June lows, around 17,500. We're not far off it now, 16,670. We've basically gone sideways for the best part of just over 6 months, and probably a sign that we're getting near the lows. If I'm starting to get bored, I've been in this marketplace since 2015 in crypto. I've been a trader for a lot longer than that. And normally when I start to lose patience, that's a sign that we're getting towards the end of it. That's why you never obey your emotions. You observe them, admit to them, and acknowledge what you're feeling, but you don't obey them. And what I'm feeling at the moment is fatigue and a run-off in my patience, essentially, for dealing with crypto in general. Being honest about it, there's no point lying to myself. I'll continue to cover it, continue to do analysis on it, but that's how I'm feeling about it at the moment. If that's how I'm feeling, then perhaps we're finally getting into the terminal phase of this correction. Perhaps we've even bottomed. So on that note, is there any evidence for said bottom? Well, let's have a look at our indicators for a minute, and let's bring up our RSI. So we've got this downward sloping resistance, okay, this high here, this high here, this recent high here, and we've been rejected each time at it. We haven't broken that trend yet, but we do have, on the weekly time frame, some pretty strong bullish divergence between the lows in June and the lower lows we made in November, right? Weekly bullish divergence. If we look at the MACD, same story, right? With the overall momentum, bearish momentum, has died down in the histogram just as the bullish momentum has died down. It's because, you know, the market's just cooled the hell off, and it's gradually calming itself down. We can tell that with the sideways price action we've had and the boredom that we're all feeling at the moment. Well, I can't speak for everybody. You know, is a sign that we are generally, you know, cooling off, and we have that divergence here in the MACD. Interestingly, on the OBV as well, we also even have it on the OBV between is this the June low and the current lows. We do have this one swing here. Let's just pinpoint where that was in September. Right, so we've got the September low in 22 on the close to the close in November. So let's just move that back a wee bit. There's the low. Excuse me. There's the low in November, and we've got bullish divergence in the OBV as well. We're still below this downward resistance though. We could just be consolidating before we take another dump. That's honestly how I feel at the moment, that I'm just waiting for the inevitable collapse. But there is a strong divergence building up over time as well. Sorry, let's come over to the daily time frame and see what we can see here. So on the daily time frame, we've got a double bottom in the OBV. You might say, well, that's not the higher lows. Yeah, but a double bottom in the OBV is divergence between lower lows in price. This is different, it diverges, so that is some bullish divergence there as well. Let's come and have a look at the RSI. So RSI, similar story over the longer term. June low to the November low, we have divergence here, okay, between our lows on the daily time frame, and the same in the MACD again. So there's divergence everywhere, right? There's strong evidence that there's bullish pressure building up after this huge sell-off, and it just wants to let rip, it just wants to go higher, and maybe that's what's going to happen. You know, we just have to wait and see, but it's just so lackluster momentum wise, volume wise. It doesn't feel very bullish, does it? And therefore maybe it's just a consolidation, a cooling off period before we plummet. Okay. Right then, so now let's what shall we do now? Oh yeah, there's a couple of other things I wanted to consider, so let's come into the linear chart again. And let's have a look at our regression channel. So we can see that we are coming right back to that second deviation. That's 2 standard deviations from the mean, is this sloping blue line here. We went from this one where we've gone beyond it, back to the median line, inside, outside. I mean, as in inside swing here, inside of this, outside swing here in terms of a new low. So inside, outside. And then we've come up, down, sideways, and we're running right into the edge of it again. We could get that little spike like we got on the outside here, and then we could get rejection and head back down lower, maybe that final flush down into those support levels. But if we do break this thing to the upside significantly and make a proper run in price, it will be the first time we've done so, right, since the highs. So it's all to play for, and the sideways price action should end soon. I mean, that's really great, Tom. Brilliant. Soon. Yeah, that's about as good as I can do at the moment, guys. We've been consolidating, we've been building up this divergence. It's either going to play out and we're going to pop, or it's all bullshit and we're going to break down. Okay, so to sum up what's been a pretty long-winded classical analysis phase of the video, the levels we're looking for are still essentially the same as they have been for months. There's no reason to think that they won't be. Alright, we've got all of those levels of confluence with our target fibs, demand zones, support, the lot. To think that we're still going to find support somewhere between 8.5 or 8 and 12,000. I know it's a huge range, with 10,277 being roughly the strongest area, or 10,000 to that 10,002 region being the most likely area to find some really significant support. However, in the meantime, we do have that fib channel we spoke about, which is that the 100 line here, or the 0 line here, that we're bouncing along. We know that matches the linear fib base channel as well, which is interesting. And we've also got those rather peculiar but entertaining longer term fib channel where we're bouncing along the 78.6 like that. So are we going to finally push back up, break this downward trend, or are we just going to take another dump, head down to the 89? It's all fascinating stuff. Alright then, guys, that concludes the classical analysis part of the video. So now let's have a look at the Elliott wave count, shall we? Okay, so the primary, something I've been in discussion with on the Discord and have spoken about in live streams as well with our members, and we'll be doing so probably this week maybe Friday again, in greater detail, because the count as it is starting to develop problems. I've got alternative ideas I'm working on, but I'm not willing to go into them here on YouTube until I have more confidence in them, and any reason to believe that they're any more probable than the current count we have here. So the only issue I'm having with this count is if this is a smaller wave degree, unless it's already bottomed at 376 days, then this correction continues to get longer and longer in the tooth, and if we are expecting a further move down, what we'll end up with is a correction that's longer than its parent here, which, as you can see, this was 376 60 something days, 370 days ish. So this is already getting longer in the tooth. Now there is some precedent for that in exponential markets. Markets we've had exponential growth, and as greater participation, or as there is greater and greater participation, the swings become more and more volatile until eventually they don't. But we're talking assets maturing over decades, okay, and even longer in some cases, and we're still very, very early here in Bitcoin. So perhaps we're still getting that huge expansive move 1 2 1 2 1 2. If not, I do have other things I'm considering and I'm looking at, but for the meantime, this is a primary wave 1 2 3 4 5 waves up. We're nesting into the prior wave 2 with this wave 2. We're yet to complete, or we're done and we're coming out of here. Okay, so I've gone WX and a larger Y. I see 5 waves in here rather than an ABC, but you could count it as an ABC. So if you wanted to go WX, Y, X, Z, I don't think anybody would object, as long as you can explain the price action from that point. I have this as a 1-2 swing into a 1-2 swing, so this should be 1-2 at a smaller level, and then 3-4-5, 3-4-5, 3-4 and 5, bringing us down into that C of that Y to get that 2 in amongst all of this support. So that's how I see the primary at the moment. We still have an old count here, the flat count. This works on the premise that we're still in a wave 4. It's very, very, very extreme. 1 2 3 A B 1 2 3 4, and this is 5. We can't come back below 13.831 spot 41, which we're awfully close to, without invalidating it. But if we do, we can finally get rid of this count. If we rally from here, then this is still, and I would argue a bit frustratingly, still legal, because we couldn't take it off of the books. And I would like to now at this point, to be honest. Would like to get rid of it, but for the meantime it's still legal. It could be 1 2 3 4 and 5 with a very large wave 4 which is retraced very deeply and taken an awful lot of time, something we don't tend to see that often in crypto markets. Wave 4s tend to be brief followed by blow off fifths. That tends to be the norm. Wave 2s tend to be deep and more time consuming. It's honestly, I feel it's just a feature of the crypto market. In the wave 2s is when we get to the most depressed, generally FUD-filled, disastrous state of affairs, and it takes time to rebuild that confidence. Whereas wave 4s, well, we're on the back of a wave 3, everyone's getting a little hyper, everyone's shouting for the moon, it doesn't tend to last very long, so we accelerate higher. So it tends to be a bit of an antithesis to more traditional markets from an Elliott wave point of view. Don't write that down anywhere or quote me on it, it's just a rough observation, but it does seem to be the case more often than not. Right, so there are primary counts. Like I said, I have a couple of alternates, but I'm not really happy presenting them yet until I flesh them out, or until the viability of that primary count becomes impossible or so stretched that I'm no longer comfortable with it. All I will say is that it is still preferred over the longer term than any alternate I currently have, because of the lack of alternation, because of the different various wave degrees and wave forms which we've witnessed up to the highs. So on that note, let's move on and come in and have a look at the smaller time frame now. Okay, so let's come in now on the smaller time frame and have a look at this recent move here. And we're going to come down to the 4 hour in order to flesh this out. What we have here are a series of invalidation points because we're building up a 1, 2, well, an ABC 1, 2, 1, 2. So we're coming into the C leg and we're building up a minute degree, and then a minuet degree, and then a sub-minuet degree, so on and so forth. So, to sum up in the simplest way, here is the B wave into here. We've gone 1, 2, 1, 2, 1, 2, maybe not done yet, probably not looking at how little it's retraced, and then down in 3, 4, 5, 3, 4, 5, 3, 4, 5. We're going to come down and seek out those lower lows. That's one way of looking at this. So let's come in a little closer so I can show you what I've got in the nitty gritty detail. So I had this as a very convoluted, and it is very ugly, correction of a flat. 3 into A, and then 3 into B, and then 1, 2, 3, 4, 5 into C to get the 2 at minuet degree. I've got 2 counts for some strange reason. That's not correct. Let's delete that one. I've then got 1, 2, 3, 4, 5 into 1. And then I've got A, 3 into B, and what I think is going to be 5. Whether it's 1, 2, 1, 2, 3, 4, 3, 4, 5, and we get an extended 3 within the C, bringing up a deeper 2. That's one option. Or it's some type of sideways combination and it's already done, in which case it's extremely shallow. Okay, because from the low we've gone A, B, basically sideways. I would expect the C to still go beyond where the A went, I really would. So that strikes me as very weak. So I'm still kind of expecting this to come a little higher. I guess it doesn't have to. It's got me guessing at the moment. Over the shorter term, price action has been very tricky, so it could just roll over from here. But still I'm personally expecting it to push a little higher, because from that swing high to swing low, we've got, let's have a look at the golden zone. We're not even at the 50, nowhere near. Right, we'll take a wave 4 retracement, we're at the 23.6, we're barely at the 38.2. That's incredibly shallow for a wave 2. So I would still expect that to come a little deeper. I wouldn't be surprised if it collapsed. I'm just expecting it to come higher. That's all I can really say at the moment, guys, regarding this count. So let's have a look at a couple of alternatives. Alright, so on the... You'll have to excuse the noise in the background. That's my little boy waking up from his nap. Don't worry, the wife will be after him in a minute. I can hear an hour of him. Right, so how else can we do this? So primary A, B. We've got W, X, A, B, C, W, W, X, Y, X, and then we've got A, B, and now C. So we've gone 1, 2, 1, 2, but what if there's something else going on? What if it's something like this? A diagonal is taking place instead. Now it's not pretty at all. We have to get 5, 3, 5 to here to get 1. I have no fucking clue on earth, excuse my language, how I can get that to be a zigzag. I see 5 here, but I have no clue how to get the larger structure to be a zigzag, because it doesn't want to be. And that's why I preferred it as a flat, right? In my primary count, where I've gone 1, 2, 1, 2, 1, 2. Because I just prefer that as 3, 3, and then 5. But maybe it's a double zigzag. A, B, C, W, X, Y. Still part of the zigzag family. Still technically a zigzag. So this is a low probability count. Let's just be clear about that. But what it gives us is an overlap here. Okay, over this low. And that's enough to suggest that we've had another A, B as a triangle, very short C into the 3. And now we've gone W, X, Y again into the 4. And now we're going to go A, B, and C down in the 5th. It strikes me as very unlikely. Like I said, it's not forming very nicely. It's looking very ugly at the moment. But if we take an extension of the wave 3, as we're calling it so far, let's leave that overlap there, excuse me, and we go from the length of the 3 projected from the 4, then the 5 can't come beyond 13,232 spot 76, because we're saying this is a leading, an ending contracting diagonal. So everything has to be zigzags of a sort, 3, 3, 3, 3, 3. There can't be any impulses here as independent waves unless they're part of larger zigzags. And a price can't go beyond 13,232 spot 74 if this is correct, because the 5 has to be shorter than the 3, the 4 has to be smaller than the 2, and the 3 has to be smaller than the 1. And that's a contracting diagonal. So low probability count. Not at all a fan of that one, but I've seen some people band it around, tried to put my own take on it, and I'm struggling to make sense of it, to be honest. But it is a contracting price structure for the moment. Sometimes it can get really messy in those ending patterns, and we have got divergence underneath, which does kind of support a non-impulsive motive wave, the diagonal being the only other option. So there's another count. What if we bottomed then? Okay, so here's an idea where we've done a triple zigzag. A, B, C, one zigzag here and an X wave. A, B, C, one zigzag here, and then an X wave, and then finally one zigzag here, like that, and we're done into the Z. W, X, Y, X, Z. Triple zigzag. It's perhaps prettier than completing with a diagonal, but it still ain't pretty, is it? We still get a pretty awful pile of crap here, right? But it is what it is, right? We get 5, and we get arguably 5 with a really long weird triangle for the 4th, and no apparent 2, but whatever. It gives us a potential zigzag A, B, C into Z. So this is a bullish count. Now off of the low we have 5 waves. Okay, 1 flat, 2, 3, wait a second, zigzag, 4, 1, 2, 3, 4, 5. Now let's just make sure I'm not mentally deficient. Right, the 3 is just longer by the wick, just longer than the 1. If we come off of log, we can see that we wick over the top here. All right, so we can say that the 3 is not the shortest. Right, but my God, is it close? It is seriously close, and the 5 is longer than the 3 and doesn't appear to subdivide as an extension. So it's a messy impulse, to say the least. Right, it's not a particularly convincing one. If we bring that 1 to here and we go 1, 2, 3, 4, 5, A, B is a triangle, 5 is a C for a flat. That's pretty bloody peculiar. I guess you could label it as a sharp. 5 here, A, B, C, D, E. E comes in as the B wave below the start of the A, then we get 5 down. Ugly no matter what we do. Maybe we should just take that top there. Okay? We can still get this thing to swing as a flat. Let's just come in and have a look. But maybe we can move it back to where it was and still get it to swing as a flat. Let's have a go. So we can say 3 to here. That's A. We can say A, B, C, D, E, triangle, B, retracing more than 100%, or at least 90% of the wave A. There it is, 90%, and then 5 down somehow in the C. Now I think that's ugly as fuck. How about we go triangle to there perhaps, and then 1, 2, 3, 4, 5, or maybe just a 3-wave swing. So we come to here, then 1, 2, 3, or 5 in the triangle to here, and then 1, 2, 3, 4, 5. It's messy as hell, right? So let's just not obsess over it. It's just messy as hell. It could be an impulse. It's a bloody unconvincing one. The 3 is barely long enough. The 5 extends, but with no subdivision to suggest that it's an extension. It's just a mess. Now, if this is the case, though, however, we do have an invalidation point down here, which we're just going to add. I know this has been a long-winded one. Tom says he's got nothing to talk about. Tom says he's got nothing to update, and then goes off and rambles for God knows how long. Seems pretty normal to me. A, blah 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 blah. B, and then C has to come in prior to that 15,479. Okay, and if that's the case, maybe there's argument for a bottom being in. 5 up, 3 back, and then off we go. It looks dodgy as hell, to be absolutely honest with you, but I won't write off any possibilities at the moment. And that's all your short time frame count. So, coming back to sum up with the primary. This is still the primary, and until these levels start getting taken out. That's it, basically. Until I start to see any of these levels get taken out. So we're in the C wave, we've got A, we've got B, we're in the final C wave of the Y, and we've got 1 and 2 and 1 and 2 done. Potentially 1 and 2 done again. That changes if we come back up of 18,373, because that cancels out this being 1 and 2. This could still be 1, this could be a larger swing into a 2. Okay, at that point, exactly how, I don't know. Some kind of combination it would have to be. If that gets taken out, it's highly unlikely at that point that this is still correct. Okay, it's really starting to break down. And if we take out the high at 2521200, then we've cancelled out this being 1 and this being God knows what into 2. Right, this could be 1, this could be A, this could be B, this could be 1, 2, 3, 4, 5 in a C. Okay, and then we've gone 1 over here, 2 over here is a flat, and then we're going 3. But if this level gets taken out, 2, 5, 2, 1, 2, then even that's impossible. So watch these levels and see if the price interferes or breaks these levels, and then this count starts to break down. At that point, every time we get through one of these levels, the likelihood of this having actually bottomed increases. As ugly as that is 5. The final level here at 25212, everything has to be reconsidered at that point. By that point, we've either seen that diagonal pattern play out, and we've got buff out of here, or we bottomed here, and this was 1 and 2. Right, but in the meantime, the primary set count still points lower, and that's the best I've got for you guys. So I'm going to have to leave it there. I know it's frustrating. You're not the only one who's feeling that way at the moment. It's getting rather tiresome. Just for fuck's sake, do something. Go up or go down. Goes to show you. See, I've been trading for well over a decade, and I still get impatient sometimes. Just don't make decisions when you're in that state of mind, for God's sake. Just brood instead, but just don't make decisions. Anyway, that's it, guys. We'll wrap it up there. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, an enormous thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron and gaining all the multitudinous benefits, then follow the link in the description box below, have a read of the tiers, and feel free to sign up whenever you like. You will be welcome. We'll be glad to have you. And if you're not following me on Twitter yet, please do so. There's a link in the description box below. I always post a link on Twitter to my latest YouTube videos in case you're not getting any notifications. Alright then, guys, take care of yourselves, and I'll be back with you as soon as I can. Oh yeah, and Happy New Year, all the best for 2023. Take care, bye bye.